Hey, Renter Retires, it's Adam Schroeder here again with you today. And today we are going to be doing another talk about the mortgage industry, what's going on for investors as they're looking for properties. I'm happy to be joined today by Kelly Rosso Soto. She is a field market specialist at Finance of America Commercial. She has 4 decades of professional real estate and mortgage experience. She has knowledge and is a trusted advisor for clients all across the country. She's personally completed 20 plus fix and flip rehabs projects, which is something I have not done and don't know if I ever plan to be doing that. I don't know if Kelly ever wants to get back into that world. And she's done more than 10 spec home new constructions. Kelly, thanks for joining us today.
Thanks for having me. I appreciate it.
Absolutely. Well, before we get into the mortgage world, tell us a little bit about your fix and flip experiences and your spec home builds. How did those go?
So after 2008, my last company that I worked for, I've been in mortgage and finance forever, since 1982. It imploded. And so I took about a year off, and then I started going to the auctions and buying properties through auction.com. And at that time, they had them at these huge facilities, right, where you go in and there's a couple thousand people. And so I would buy properties there. I'd go to the court steps and I'd buy auction properties from the court steps. I flipped up until 2012, and then that's when Blackstone and other companies came in and started swooping a lot of the properties up. And if you were to flip them, you weren't going to make any money the way that they were bidding. And so I started buying land, and then we just started speccing houses on there, and it worked really good. I stopped because I got sick. So that was the only reason that I stopped. I would love to start flipping again because I really enjoy it. It's fun.
Nothing quite like taking up a hammer and smashing some walls apart and putting them back together, I guess.
Yeah, exactly.
So tell us a little bit. We've been seeing, I've been seeing stories in the news all the time. The market's cooling down a little bit. Oh, the market's heating up a little bit now. Kind of what's going on. What are you seeing in your company? What are y'all seeing in regards to mortgage starts and kind of what the general flow of deals is with y'all?
So for us, I mean, I'm busy all the time. I'm never not busy. So when rates go up on the forward side, it doesn't matter to us because we're not affected by that. Not really. And the investors want money. They are there to capitalize on the profit. So whether the interest rates skyrocket and the pricing goes down per property, the margin is still going to be there for the flippers, right? So good times, bad times, these guys are flipping all the time. So it doesn't affect us. I'm super busy. Underwater busy. I work probably from 6 in the morning till about 11 at night every day.
Ooh, man, that's a good. So why don't we talk a little bit? You are a non-conventional lender. Can you tell us a little bit about what that means in regards to the mortgage world?
Yeah, so I am a commercial lender. We underwrite loans into people's entity structures. We can do it as an individual as well, but we do it in entity structures primarily. These are business purpose loans. So we don't look at tax returns or W-2s or pay stubs. We don't verify employment. We're strictly looking at experience for fix and flip and credit score. We do a background check on these guys, no felonies. In the last 2 years for the credit, we look at mortgage late, short sales, bankruptcies, foreclosures, deed in lieu. So none of that in 2 years. And then for our long-term hold, because we have a long-term product as well for rentals, and that's for borrowers that have too many properties financed. They want to take title in an LLC. They want to put them all in a portfolio. They have 20 units, things like that. So that's the type of product that we do, and they're all business purpose loans.
Yeah. So let's talk about that. Let's focus on the investor who has, more than 10 loans or is buying through their LLC. What are the differences or is there a difference in the mortgage process as you're going through it, wanting to finance, property 12 as opposed to what you had to do for property 2 when it comes to actually getting your mortgage?
Are you talking for fix and flip?
No, for just the person buying their own rental property to, buying a turnkey property and wanting to get having to go through you for financing versus having to go through the conventional financing they've done for their first 10, let's say?
Right. So it's simple. We're going to pull their credit. We're going to make sure that none of their mortgages are late, right? And we're going to make sure it cash flows. So pricing is indicative upon LTV, FICO score, cash flow, and the property type, and if it's vacant or leased. So with rent to retire, 9 times out of 10, those guys do have properties that are already leased. So it's definitely beneficial to the borrower when it comes into that play. And then pricing is just gets priced off of that. So our pricing is really aggressive. It's anywhere between 3.5% to 6% on a 30-year fixed. And so that in itself, you're not providing any income documentation. We're not doing a verification that you even have a job. It's just basically, are you paying your bills on time, your mortgages? And are you, does the property cash flow and you have the credit score? So we'll go as low as a 640 credit score on this type of a program.
Okay, now I imagine some people are hearing this and thinking, "Oh my gosh, they're not doing income verification," and they're starting to think back to the great financial crisis with the whole no doc loans. Can you put that concern to bed a little bit for people?
Yeah. So that in itself, right? When we were doing those loans back then, because I was, a rep back then as well, those loans defaulted because we were doing deals for people where they were houses that they absolutely could not afford based off of the income. So the income that was provided on the 1003 was fake, and it was just, they were just not good. And the borrower was signing for them. These loans, we're basing it not off of the borrower's ability to repay, we're basing it off of the cash flow of the property. So it's really kind of fail safe. We figure out the debt ratio, we know what the market rents are, and we're going to take the lower of the two, either the rents in place or the market rents, whichever is lower. And that's going to, so we know how much cash flows there. We know how much the property taxes are annually. We know how much the insurance is annually. And that's how we create what leverage we're going to loan on these projects.
Yeah, fantastic. That's a lot safer than it was back in 2006,
Absolutely.
2007. When it comes to people buying through LLCs, because this has been a big topic people are talking about now, is should I buy through my LLC? Should I buy through my own name and moving into an LLC later? If you're actually going through the process of buying straight through an LLC, what different, how does that change from just buying it in your own personal name?
Well, if you're going conventional financing, you can only finance 10 properties
Right.
total,
But
right?
when we come to you with the non-conventional loans and buying through the LLC, how does that change the process?
Well, these loans don't report to your personal credit report. The only time we're going to report you is if we have to foreclose on you. So these are all, again, non-owner occupied residential loans, right? Nothing is owner occupied that I do, nothing. We don't really have financial fraud because we don't look at income, but we will look at residency. And if the borrowers are moving into the property, it'll be a huge problem for them because the loans will go into automatic default. That's pretty much
Yeah.
it.
Fantastic. So where are you seeing the biggest, are y'all seeing the biggest rise in properties coming in for mortgages in the Southwest, like a lot of America's seen, or is it just kind of booming everywhere? Is there anywhere in the US that you're seeing a bigger influx of people requesting loans for?
Everybody is moving a lot of their properties. There's a lot of 1031 exchanges happening, and I'm sure that, Rent to Retire is seeing that as well. And taking their money out of certain areas and placing them into these different states. I would say Texas is really booming, Idaho, Utah. Washington was going there for a while, but not so much anymore. a lot, Tennessee, Indiana, Iowa, Florida, Georgia, I said Tennessee. I would say those are like the big states right now. Oklahoma, those are the big states that people are pretty much, running over to put their money in.
Nice. Yeah, and you mentioned the 3.5 to 6% rates that y'all are able to get for people. Can you kind of break it down? You said you can go as low as 640, but if someone's just coming in, can they do 20% down, or because it's an LLC loan potentially, do they have to do 25%? Kind of how do the credit scores and down payment impact the rates that you're seeing right now?
So a credit score from 640 to 699, you're going to be maxed at 75% loan to value. Loan amounts are, let me back up, purchase prices or values less than 150,000, you're going to be capped at 75% loan to value. If you have over a 700 credit score and your purchase price is over 150 or over, then you can go up to 80% loan to value. In order to get really the lowest pricing, so the majority of the investors that I deal with, both men and women, they do this for a living, right? They don't have jobs. This is their income. This is their retirement. This is their plan. So these guys are buying multiple properties, and they are, they're all cash flowing. And again, we don't look at their personal DTI, so that really doesn't matter, right? But yeah.
So if you're in the, say, 640 to 699,
You're
putting
not really going to get
25% down.
3.5%.
What?
You're not going to really get 3.5%, not with a lower credit score. So it works like forward mortgage, right? The lower the credit, the higher the rate. The lower the credit, the higher the loan to value, the worse the rate will be. And that's indicative of anything in the lending space. So
Yeah.
I would say majority of my people, they probably are doing anywhere between 25 and 30% down on their properties, and they'll buy the rate down as low as they can buy it down, because the rates to buy it down, you'll make that money up over the long term. So they try to get as close to that 3.5% as possible.
Yeah. Has your industry been experiencing much turmoil in recent days with all of the debt ceiling, government default concerns, as that impacts the kind of treasury market in general? Is that impacting your market much?
No, not at all.
Okay. So what are the big movers in y'all's lending world right now?
As in,
Like what's causing any fluctuations that you're seeing in the market at the moment?
I'm not really seeing any fluctuation. I'm just seeing people buying like properties are going out of style.
Yeah.
I mean, I don't see any of that part of it. And as far as the financing part, we're private money. I mean, we're a publicly traded company now, but we are, we don't work off of treasury. We're not,
Right.
that's not what we look at, right? These loans are different. They're structured differently.
Yeah. I
When
just
we
didn't
go to
know if
sell
with
them.
as treasuries have gone up, if your people have gotten more nervous and started wanting more return on their money.
No, not yet. I mean, could it happen? Absolutely. But as of right now, no, nothing's happened and it's been fine. But our rates are not A paper rates either, right? You got to keep that in mind.
Yeah.
These guys can go and get a 3 1/8 rate, if they go full doc through a regular conventional loan. I don't offer, those rates. They could probably get it even lower if they wanted, but I don't offer those. So this is the path to least resistance.
Yeah, absolutely. So where are you now as an industry versus, say, end of 2019 before COVID hit? Kind of how would you compare your industry now versus then?
So before pre-COVID, we were crazy busy. And then COVID hit, we shut down for 3 months because the secondary market did not want these deals. And then we opened back up, like really opened up and got aggressive again, probably in August of 2020. And I think that we are busier and we're going to do more business this year than any other year over year. It's it it's busy. It is busy.
Yeah. So it's significantly more than you had going on in 2019 and 2018 even?
Absolutely. The new construction is still really tight for the ground up, but everything else is crazy. I mean, I think I submitted this month, I think about 100, over 100 loans.
That's it's
That's a
good
lot.
business.
Yeah. And I do it pretty much month over month. So,
Yeah. Now, when it comes to, you hear a lot of people in the real estate, you've worked in the real estate world, you've invested in real estate. Are you concerned at all about a quote unquote housing bubble at the moment?
no, it doesn't even affect, doesn't bother me, not even for 1 second. I mean, if it snaps, which it's going to, right? We all know that. You can't continue to do this. It makes zero sense. But if it does, again, these investors are waiting for it. They're waiting for that market to pop. They're waiting for the foreclosures to explode. Um, the moratorium is being lifted. I think it was today, is what I read this morning. I'm pretty sure it was today. And, you know, for the renters. So if these people can't, don't play catch up, then obviously we know what's going to happen to their houses. And these people want these houses. And they're, like I said earlier, when I started buying, whether I was buying at $100,000 for a property that previous to that was worth 500,000, my margin spread is still going to be good, right? When I sell it or flip it or whatever it is, I'm not even. I am kind of. I'll be even busier when that happens. Put it that way.
Yeah, I've been saying it since the forbearance and all the moratoriums came in place. With the response that our federal government had, the impact, that the big wave that people were expecting to happen, I just said it's not going to happen because they've shown, they're not going to. My theory was, in the great financial crisis, people got kicked out of their homes because they messed up. They were
Mhm.
doing things they shouldn't have. This
Mhm.
time, the government wasn't going to let you get kicked out of your house for something the government messed up,
Yep.
because this happened because of the government. So if you looked at the numbers, it's been running true. I mean, every month you see the forbearance numbers, and they keep getting better and better and better. And you see the people able. I mean, obviously, not everybody's caught up on their rent, but they've been getting better and better. And
Mhm.
so I think there might be a little bit of an uptick in foreclosures
Yeah.
and obviously probably evictions, but I don't
And
think
a
it's
lot
going to
of
be the. Sorry, go ahead.
oh, I'm sorry, I was gonna say, and a lot of the lenders will allow you to take that forbearance that you've got in the rear and just tack it onto the back end of
Yeah,
your loan, and then you're out of it. So it's not, you know what I mean? So there's
yeah,
just a lot of different ways that these guys can play it. But we're gonna be busy.
yeah. Absolutely. And yeah, as soon as they said if your tenant has trouble paying, you don't have to pay your mortgage, I was like,
Oh,
oh, everything's fine then. You know,
that was a joke.
yeah.
Yeah.
But I mean, if they're going to do that, it was kind of, the market's fine if you're going to do that.
Yeah.
So that was kind of my take on it. And it's looking hopefully like I'm going to be right about it. And we're not going to see a huge influx of foreclosures coming in, which is good for the current real estate investor, but maybe not the aspiring real estate investor, as the
Yeah.
prices aren't going to be dropping.
You're right about that. The guys that have been doing it for a long time, I mean, housing, it always goes. I had a boss that I worked for 10 years. I worked for a builder for 10 years. And I remember him always saying, I was really young at the time, and he said, Kelly, what goes up comes down, and what goes down goes right back up. So always remember that
Yeah.
in this industry. And I've never forgot it. So,
Yeah. Now, when it comes to, we talked about how busy it is now versus how busy it was in 2018, 2019. What
mhm.
are rates like now compared to what you were seeing in the pre-COVID? Are they still decently lower than they were then, or is it about right?
Um, they're definitely lower for sure. Everything is in the pricing was lower. The housing prices were
Right.
lower and the rates were maybe a little bit higher. So now the pricing is higher. so the rates are lower, right? Isn't
Yeah.
that how it always happens,
Yeah,
right?
your payments are about the
Um,
same.
right, your payments are the same. It really doesn't, it's not a big deal. It's not a big
Yeah.
deal. And our pricing now is, yeah, it's lower than previous, but I wouldn't say by a whole heck of a lot.
Yeah.
Maybe an eighth, maybe a quarter, maybe. That's nothing.
Yeah. And so what I wanted to get at with that for investors who aren't in the real estate world yet, it's kind of one of those things you could wait for the prices to go down potentially if they do. But as Kelly was just saying, when that does happen, guess what? You walk into Kelly's office in a year and the prices have crashed, and you say, "All right, Kelly, I want that 4% loan now." She's
Mhm.
going to laugh at you and she's going to say, "Well, so do I. But now I need 5% or now I need
Yeah.
6%." And
Yeah,
you're just
it's definitely indicative of the market.
yeah. And so, in I don't see the prices coming down in the near future. So the question is, if you wait for it to go up 20% and then it crashes 10%, well, you missed
You're
out on
still
a lot
ahead.
there.
Yeah. Or if you bought, you're still ahead. So, I mean, now, at first when this started going crazy, like I said, I've been in this industry for a long, long, long time. And those people that have been in it for a long time expected it to already have crashed, right?
Yep.
And pricing is still holding steady and it's going really, really, really well. And, you just have, I'm still buying. So
Yeah.
I'm not going to stop. And because again, what goes down goes up, what goes up goes down. And if it's for your future, it doesn't matter. Just hold it.
Exactly. And we saw it go up massively in 2006, 2008, and then it crashed. But the thing was, once that happened, you didn't see the building and everything rise after that, and it still hasn't really risen. So we haven't it's gone up steadily for a long time, but it hasn't had that big shove, and we don't have that massive surge of housing that we were having back then when they were building, 2 million plus homes a year for 4 years or whatever it was. So there hasn't
Exactly.
been that pressure there. So what tips do you have, or what's your kind of opening talk with investors if they come to you and say, "Hey, I'm ready to get started." Let's say they've formed an LLC, they're ready to buy through it. Kind of what are the first kind of stepping points that you direct people towards as they're getting their loans and getting their mortgage?
So what I do is I have them, um, really, there's no real pre-qualification again, because we're not using income documents, right? So there's a quote form that I have, and when they find a property, they just shoot it over to me. They get all the information, usually from, like the guys at Rent to Retire. They'll fill out this one-page form, send it to me. I'll get them pricing. I'll get on the phone with them and then kind of walk them through what the process is. Because they always say, "Oh, I need to get pre-approved." I'm like, "Oh, well, no, not really. These are commercial loans, so
Yeah.
as
You
long as
need
you haven't
something
done
from
this,
me to make
this,
your seller happy. Yes.
right. So as long as you haven't, had any felonies in the past, in the last 2 years, you've been no mortgage, late short sales, bankruptcies, foreclosures, deed in lieu, and as long as you've owned one house in your past, you're good to go. Like we're going to underwrite the property. We're not underwriting you.
Yeah. What's your loan origination fee?
It's usually 1.5%.
Okay. Fantastic. All right. Well, is there anything else you think our listeners need to know before we wrap it up?
No, I think that that's really it. It's a great time to buy. There's never a bad time to buy, actually, uh, per all of my investors that I deal with. Um, and it's a hot market, and it doesn't look like anything's going to stop. And if everybody, like you said, if everybody's worried about the crash, if it crashes and it drops 10%, so what? It's still really high, and it definitely will always, always go up for sure.
Yeah, and just remember, if it crashes and people get kicked out of their homes, guess what they're looking for? They're looking for a place to
They're
rent.
looking for renters.
I
That's
mean, your home
right.
value might go down, but your rents are going to go up because those people are going to go to Kelly and her competitors and say, "I want a home loan," and they're going to look at their docs and say, "Oh, wait, you just got foreclosed on or kicked out of that home. I can't loan you money for a couple of years." And then
Mhm.
you've got even more customers as
That
a
that's
landlord.
that's right. And rents are, steadily, you know, in in states unlike, I'm in California right now, so unlike here, I'm getting rid of all my properties here. But In other states, they don't have, the cap on rents.
Yeah.
Which is great. So, and if this is your retirement and this is your game plan, then that's the good thing to do. You just have to make sure it cash flows, right? I mean, that's what's king. And anybody is able to contact me and I'll walk you through it. I'll go through all of what your expenses will be, and then, help you from that point on and let you know what a good deal is and what a good deal isn't.
All right. Well, Kelly, thank you so much for your time today. I greatly appreciate it.
Oh,
Everybody
you're
else,
welcome.
head on over to renttoretirement.com. You can see all of the other podcasts we've done. You can see our contact information, so you can reach out to us. If you need to get a hold of Kelly, we are happy to put you in touch with her. You can also view the properties that we have available there on our website. And if you want to get our properties sent straight to your phone every day when you wake up, you can go to renttoretirement.com/hotlist. And those will be sent to you immediately as soon as you start subscribing. So again, that's renttoretirement.com, and we'll see you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.